This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Brent and U.S. crude futures fell more than $2 a barrel, or more than 3%, on Friday as U.S. President Donald Trump's threat to impose increased tariffs on China cast a shadow over the demand outlook in a market seen as oversupplied. The sell-off was driven by a shift to risk-off markets following Trump's post-threatening tariffs on Chinese goods, said Giovanni Stanovo, an analyst with UBS. Brent crude futures settled at $62.73 a barrel, down $2.49, or 3.82%, the lowest since May 5. U.S. West Texas Intermediate crude finished at $58.90 a barrel, down $2.61, or 4.24%, the lowest since early May.
Asian spot liquefied natural gas, LNG, prices rose this week, gaining for the first time in nearly a month, on colder than expected weather in Europe and following Russian strikes on Ukrainian gas infrastructure ahead of winter. The average LNG price for November delivery into Northeast Asia LNG was $11 per million British thermal units, MMBTU, up from $10.60 per MMBTU last week, industry sources estimated. The price for December delivery was estimated at $11.20 per MMBTU.
Moving on to the top news in the energy sector.
Oil exports and transit from Russia's western ports in October are expected to stay close to September's record levels due to increased refinery activity, according to industry sources and Reuters calculations. Shipments of Urals, Siberian Light, and KEBCO grades from the ports of Primorsk, Ust-Luga and Novorossiysk may fall by around 200,000 barrels per day, BPD, from last month to about 2.3 million barrels of oil per day, based on average estimates and data provided by industry sources. Russia's growing OPEC Plus quota and ongoing refinery maintenances support strong exports despite an expected increase in domestic processing. Russia's October OPEC Plus quota rose by 93,000 barrels of oil per day from September to 9.457 million barrels of oil per day.
Saudi Arabia's crude oil exports to China are set to fall in November to about 40 million barrels as refiners are expected to switch to cheaper spot supply from other Middle East producers, several sources with knowledge of the matter said on Friday. That would be down from the expected surge of 51 million barrels of crude exports in October from the world's top oil exporter to the world's top importer. On Monday, state oil company Saudi Aramco left the official selling price of its flagship Arab Light crude to Asia unchanged in November, against market expectations of a price hike, a day after OPEC Plus agreed to a modest increase in oil production. Next, we have the top news in metal markets. Copper prices fell on Friday after U.S. President Donald Trump said Washington was calculating a massive increase in tariffs on Chinese imports, inflating fears of a trade war between the world's two largest economies. 3-month copper on the London Metal Exchange lost 3.8% to $10,450 a metric ton by 1600 GMT. It hit $11,000 on Thursday, moving closer to its all-time peak of $11,104.50 set in May 2024. China dramatically expanded its rare earths export controls on Thursday, adding 5 new elements and extra scrutiny for semiconductors, as Beijing tightened control over the sector ahead of talks between Trump and Xi Jinping.
Investors are testing well-established views about gold, which is surging to new records, as an eye-driven stocks rally and red-hot Bitcoin force a rethink of what's driving one of the world's oldest asset classes. Gold topped $4,000 an ounce for the first time this week and with a 53% gain in 2025, is heading for its best year since 1979, trouncing Bitcoin's 30% rise and the 15% increase in the S&P 500 plus its array of tech titans. Typically, the metal thrives when investors fret over inflation, economic slowdown or potential market turmoil. Conversely, when investors' risk appetite improves, it tends to lag shinier alternatives that do not require extra cash to store or insure them.
We will now look at the top news in the agricultural sector.
Cocoa futures on ice fell on Friday to post an eighth consecutive weekly loss, with rising global production and weak demand set to lead to a global surplus in the 2025-26 season that began last week. Coffee prices also fell. Both London and New York cocoa contracts lost 5% in the week, and have now posted losses for 8 consecutive weeks, with New York losing 33% in that period and London losing 28%. Arabica coffee settled down 4.05 cents, or 1.1%, at $3.5635 per pound. The market posted a 4.7% weekly loss.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.